Welcome. You're listening to the Best of Investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience, listening in. I'm your host, Edward Brown. I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Rick Warner of Keller Williams Realty. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 2,965 miles away from Hawaii. You like that?
Yeah.
Okay, it's actually located 1 hour northeast of San Francisco. And the vacations are free. They only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fund.com. You can reach them at 916-777-5511. Today's trivia theme is seldom seen on TV, and you'll understand when I get to the question. And a special thank you to our videographer, Kramer Herzog.
Hey, Kramer.
Yeah, whose Eye of the Storm is playing in the International Film Festival in New Jersey, and he's actually recognized the Best of Investing on the film. Thank you very much, Mr. Kramer.
Absolutely.
Okay, and our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. Today we have a special guest, Aimee Elizabeth, who is the best-selling author of, get ready, Poverty Sucks, which we all agree, poverty does suck.
No kidding.
Okay, Aimee, welcome to the Best of Investing.
Well, thanks. Thanks for having me, Edward. I appreciate it.
Hey, Aimee, you've got a great story of how you achieved your wealth. Could you just share with our listeners real quick how you came up in the financial world?
Well, I started as a broken, homeless teenager, and I started my first home-based business when I was 20, and I started up 3 others as well, and I started them on a shoestring budget for like $1,000 or less, and by the time I was 38, I sold them all off and retired, and I'm now a multimillionaire, successful real estate investor, business consultant, and best-selling author of Poverty Sucks, How to Become a Self-Made Millionaire. That's my story in a nutshell.
Well, that's a great nutshell. So tell us, I saw an article that you shared with us that the headline is, Find Out Why This Millionaire Financial Guru Says College is a Waste of Time. Share a little bit about this with us.
It's also a waste of money. A huge amount of money. These poor kids who have had no financial training ever in school. Liberal arts doesn't teach you anything practical. So they have no real sense of what money means and how to earn it and what it takes to get it. They take out these ridiculous student loans. By the time they're out of college, they're $100,000 in debt. And if they're lucky enough to find a job and not move back into mom and dad's basement, they might find a job that pays $9 an hour. Well, that's to pay off a $100,000 loan real fast.
Well, that's $8 an hour more than I make, so that's okay.
Yeah, I think it's just a waste of time and money. I mean, $100,000 could buy you a nice home in a lot of areas of the country. So why waste it on college? Especially when you can read my book for $15 to $20, depending on where you buy it, and teach yourself how to open your own business, home-based. I never worked more than 2 to 3 hours a day, 4 days a week working out of my home because basically I'm just a lazy bum. So I had to find a way to support my lazy lifestyle.
So what was
I had to create a big pile of money.
What was your home-based business?
The income. Pardon?
What was your home-based business?
My first one was a fashion show business. We put on fashion shows during happy hour at like Holiday Inn lounges and neighborhood nightclubs, and so it increased their happy hour business. And we got paid to put on the shows, and I often, had many models working for me, many shows all at the same time, all over town, and it was very lucrative, very fun, very easy business. Home-based businesses are very simple, very easy, and don't take a lot of startup capital, which is key.
So you do a lot of consulting now for your clients. Aimee, what kind of home-based businesses are you advising your clients to look into?
I advise them to chase their passions. I tell them to brainstorm and make a list of everything they enjoy doing. And then we narrow those down and we figure out a way that you can make money around your passion. Because if you're not passionate about what you're doing, it just becomes work. And we know that's a horrible four-letter word. So find what you love, and you'll never work a day in your life.
Yeah, but at what time do you decide it's time to quit your day job and do that?
If you're already working a day job and you're already a responsible adult out of your parents' basement and you actually have regular bills you need to pay, let's pretend that your monthly bills total $2,000 a month. You don't want to quit your day job until your new business is making you at least $4,000 a month and you have 6 months worth of expenses in the bank. That way, if anything should happen, if you lose a client, or just, business conditions change for whatever reason and your income fluctuates, you have that safety net to ride out the storm.
So if you're not a big proponent of traditional college-based education, what kind of educational options do you advise for your clients?
School of Hard Knocks.
Yeah, the
Aside
School
from
of
that.
Hard Knocks is definitely a good one. Although I don't believe everyone needs to be hit with a baseball bat to learn. So I suggest that our whole school systems be revamped. Toss out the liberal arts. I mean, reading, writing, arithmetic, those are key.
Yep.
Maybe 10% liberal arts, but really it has no practical use for living unless you're going to be a liberal arts teacher. Teach people, about the tax code and the best way to structure their life and their finances and their investments to maximize what they get to keep and minimize what they have to pay to the government.
You could
teach
do
you
what
all the laws that you need to know, useful things,
I
how to budget, how to manage your finances, investing, everything practical that you need. We don't need to know about all these dead people from thousands of years ago.
Yeah, well, actually, the one thing is I know that they say, history, those who ignore it are doomed to repeat it. And of course, you can always go to the college I went to, which was What's the Matter You?
Yeah,
But actually,
I like that one.
You like that? Actually, the college I went to, the university, the thing I liked about it is that they had professors there who were not just educated in school, but they were actually practicing in their profession.
Well, now, see, that's a whole different kind of teacher.
Yeah.
That kind of teacher is going to teach you something useful. But the other thing I found by not attending college, because college also, again, they make you take all those useless liberal arts courses, whereas if you just focused on your area of interest and expertise that you wanted to become, you could save so many years and so much money. And for me, I could just go to Borders or Barnes and Noble when there were still brick and mortar bookstores and buy a $10 or $20 book and learn what I didn't know by reading it over an hour or a day or whatever, and boom, there I've learned what I needed to know.
So one of your reviews of your book said that it's not just about getting rich by simply thinking positive thoughts. Tell us a little bit more about some of the things you share in your book for your readers.
Basically, I go over everything you need to know, start to finish, on how to open your own home-based business, from selecting what type of business is right for you, to naming it, to all the legal aspects and tax aspects, and how to market it and grow it, how to decide when it's time to sell it, what you want to invest in after you sell it and retire, if you want to do real estate like me, or you want to do paper assets. Or if you don't actually want to sell it, you could just hire a manager to run it for you, and then you never have to sell it. You can just keep the cash flow coming in that way. There's no one right way. There's a whole bunch of really good ways to do what I did.
Aimee, hi, it's Rick Warner. Listen,
Hi, Rick.
This sounds really fantastic. Why is it, do you think, that not more people are doing this already?
I think, unfortunately, people get brainwashed. After 12 or 13 years in the liberal arts school system, you think it's the only way to go. And as far as the earlier comment about history repeating itself if you don't learn it, and my little joke about who cares about the dead people anyway, well, you know what? I've actually studied a fair amount of history, and we are repeating history.
True.
We're destroying our country by putting it into so much debt. People can't live on more than their means for only so long before they have to file bankruptcy. Our country's doing the same thing.
Except the
Have they
government
ever read
can
a
just
history
print.
book? Any of our politicians? It would seem not.
No, but you know what? The difference is they can just put more gasoline in the engine and just print more money, which of
Well,
course
they print more
eventually
money, which
just
causes eventually going to
inflation.
cause hyperinflation.
Sure.
The dollar will collapse. We'll become a third world nation overnight. I mean, they don't see this coming. How stupid are they?
Well, it's very short
Short term versus long term.
Yeah, exactly. So,
But
Aimee,
yeah, they want to get reelected.
Okay,
So they
Aimee-
want to kick the can down the road
That's
until
it.
they get
That's
reelected,
the
and
job.
then it's somebody else's problem.
that's the job of a politician, is to get reelected. So,
Right.
Aimee, how do people get a hold of your book, Poverty Sucks?
There's a variety of ways to find my book. You can go to my website at www.aimeelizabeth.net. That's www.amieelizabeth.net. You can also purchase it on Amazon.com, Borders.com, BarnesandNoble.com, any of the little .com bookstores, and pretty much any bookstore around you can find it in. So
Great.
there aren't any left.
Okay. Aimee, thank you so much for joining us on The Best of Investing.
It's been my pleasure. Thanks for having me.
All right. Bye-bye.
Bye.
That was kind of interesting. Okay, we are
Indeed.
going to cut to our
College
first-
sucks too.
College sucks.
Poverty sucks. College sucks.
Everything sucks. Okay, we're going to cut to our first commercial break, and again, the theme is seldom seen on TV. In the sitcom Cheers, Norm Peterson sat at the bar and often talked about his wife, but we never saw her face. What was her name? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In the sitcom Cheers, Norm Peterson sat at the bar and often talked about his wife, but we never saw her face. What was her name? 888-912-1190. Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time, and don't touch that dial because the best of investing will be right back. Okay.
Do we go long with
A
that
little
one?
bit, yeah.
Yeah,
So
I thought we
that's fine. There's
kept
only so much
thinking
to
you were
talk
gonna.
about.
Yeah, right. Well,
We
Well,
are
well,
saying it right.
Yeah.
Yep.
Fine.
You go ahead.
I'll ask you the questions after that too. I'll ask you the question, say about the Vera, and then we'll say what about the guest. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money and Rick Warner of Keller Williams Realty. When we cut to the first commercial break, and again the theme was seldom seen on TV.
Mhm.
Here was the question. On the sitcom Cheers, Norm Peterson sat at the bar and often talked about his wife, but we never saw her face. What was her name? Rick, what's the answer?
Vera.
Vera, that is correct. And apparently you have a funny story about that.
Well, I just closed a house yesterday in Mill Valley for a nice couple that spent a fair amount of time helping them buy this place, but I never ever met the husband. So
Okay.
The joke was, and I even said, your husband's kind of like Vera on Cheers. I don't know that he actually exists. I've never spoke to him, never once did anything. He signed everything, of course, and via electronics and whatnot. But as far as I know, she really doesn't have a husband.
As long as you did it in front of a notary.
Well, he did that at title.
At
but I
title,
wasn't-
okay.
yeah, I wasn't there.
Do realtors ever say that they, sold a house for not a nice couple?
Oh,
Well,
did this
transaction for a nice couple?
off the radio,
Off the
absolutely.
radio. Oh, those guys were the worst.
Exactly.
Actually, it's funny because I mentally prepare myself for basically 80% of my clients being some kind of neuroses or something that's going to drive me crazy.
Well, you got to figure it's a personal asset.
It's
like
super emotional.
It's sure.
Yeah, absolutely. So half my job ends up being counseling or, whatever, which is totally fine. And as long as I go into it with that expectation, then it kind of doesn't matter who I come across because, you set your expectations low enough. And
Well, I knew this attorney who probably made at the time, this is going back 20 years, and back then he probably made over $300,000 a year, which is pretty good. And he told me one time that he lost out on a house that he wanted to buy, and he and his wife loved the house, but he haggled over a $500 fixing of the fence. And his wife was all, just do it. And he goes, no, I'm an attorney, and these are my rights, and blah, blah, blah. And he
Yeah.
lost the house. And he
Well,
regrets
and
it to this day.
that's such a great point because that has end up being a lot of what I help people is trying to put things in perspective. Let's see the tree through the forest kind of thing.
Yeah.
Where,
Can't see the
look, I
forest
get
for the
it.
trees.
You're right. The $500 it should be them, but do you want to give up the whole
You
house?
pick
over
and
this?
choose your battles.
Right.
Exactly. Okay, and when we get into your email right now,
Or
but just 2 seconds from now, what do you think about our guest?
I thought she was fascinating, but we were talking a little bit off air about that, Mark. I mean, it's an interesting concept, but I think that her philosophy probably applies to maybe 10 or 15% of what I'm making that number up, but
Sure.
some smaller number. In other words, not everybody has that kind of entrepreneurial spirit and willing to take the risk and all that.
And
Right.
not everybody's destined to go to college.
Right, and then and we're talking about is college a waste of time? And as I was explaining off the air that my 17-year-old daughter is graduating high school and going off to college, and for her, it's like it's another 4 years. It's almost like an extension of high school. It's building the foundation of her maturity, her disciplines, getting
Living
more
away from
experience. It's not necessarily that we're putting her to college so that she'll necessarily learn something specific to go out and make money with. Although I guess that'd be nice in a perfect world. But
Yeah, because it's a lot cheaper to not go to college.
It is, but it's certainly, and we've all heard the stories, the Bill Gateses and the others who
The
have.
Tumblr kid, right, who just sold his
Oh, yeah.
Yeah.
high school
Well,
dropout
wait,
for
what-
1.1 billion.
But
Why-
I think that's definitely the exception and not the rule.
Absolutely.
I think for,
Why
for
don't you
most
just-
people.
Why don't you just have her do what I did and spend an extra 2 years in high school, do the 6-year high school thing? Okay, Rick, here is your email that we received.
Edward was driving to junior high. He was the only guy shaving in
Oh,
That was
okay.
awkward.
No, that's fine. Okay, so Rick, here is the email we received for you. It says, prices seem to have increased so quickly. Should I wait for prices to go down and then try to purchase a home? Which kind of was almost along the lines of the attorney problem,
Well, that presupposes that we're in a bubble and it's going to burst and we're going to go down. And I don't know how many people are taking that tack. What do you think, Rick?
It's a great question. It's certainly one that is posed by a lot of people right now. The question is, is it going to go? What is it going to do? Is it going to continue to go up and then plateau? Is it going to continue to go up and then come back down? Is it going to not continue to go up and just come backwards right now? And of course, nobody really knows the answers to those questions.
no, but you've hit every single possibility.
Thank you. Yeah, well, it's because this is
One
what
of
I
those
do
three.
all day long, right?
Yeah.
And I get this question all the time. I think that there is enough momentum right now that we clearly are going to continue to go up for at least the foreseeable future. And what I mean by that is 6 months to a year, unless there's some huge spike. And and we have had, Jeremy's not here this week, but interest rates the last 2 weeks been a tremendous amount of pressure on the upside. We're up half a point, from just in the last 2 weeks, which is a lot. And if that momentum continues, for example, or if we're seeing a lot of people that were kind of sitting on the sidelines waiting to sell their house, they're coming on. So if the supply keeps increasing, those things are going to have some impact on that. But at the end of the day, I think right now, if you're in a position where you can buy a house that fits your criteria, that you can afford, that you should do it now.
It's too bad that Jeremy's not here because that's an interesting question. Is how much do interest rates have to rise in order to make up for the fact of a change in the price of the house?
Right,
You know
because
what I mean?
that in itself, of course, is going to have another impact on people down. Now, I'm not talking 6 months or a year, but let's say 3 years from now, 2 years from now, where interest rates are say at 5 or 6%, and you are thinking about selling your house, but then you go, well, geez, I refinanced or purchased my house, and I'm paying 3.5%. So to make an increase in their home size, to kind of be what's called a move-up buyer, how are the numbers going to work? They're going to end up to buy another house. They're going to pay so much more money than what they're paying at their current interest rate. It's going to be kind of interesting.
Do you think there'll be pressure to bring back the assumable loan?
Yeah, absolutely. I mean, if nobody even knows about the assumable loan, right? Because we've always had, in our time.
Well, they
frame,
eliminated it in in 82 or 83? I mean, like a long time ago.
Yeah,
most of us.
FHA I think is assumable, right? So I think that's still kind of the case. Although depending on where you're at, you're not even getting FHA loans. But it is an interesting question because, and remember, where were we at 1982? Right, peak interest rates. You're paying 14, 15% for your home mortgage. But since then, basically for the last 30 years, our rates have been going down for 30 years. So that's a whole other thing, and we talked about that a few weeks ago. What is the long-term cycle of interest rates? Are we destined to go back to 10, 11% mortgage rates? And if so, what's that going to do?
Oh, yeah, kill the prices.
Well,
Don't you think?
Well, the article that I brought in, actually, I think maybe we should talk about it now because it's we kind of touched on it. You mentioned that the caller's asking about should I wait for prices to go back down, and there was an article this week, how to fix the great real estate after bubble. And this was in the Huffington Post. And so a environmental economic professor from Columbia University, so we're probably not talking about a liberal viewpoint, are we?
Yeah.
Suggests that Congress should force banks to write down the principal balances on millions of underwater mortgages to their post-bubble market values. That way we can get more inventory on the market, and it will hopefully help to, I guess, stabilize this price bubble.
But if they, I was going to say, if they wait long enough, the prices will go back up. But wait a minute, Columbia is a pretty liberal college, isn't it?
Being facetious.
Oh, okay. I thought maybe you said it so serious. I thought you were actually serious about
that.
Well,
and then another article that I was reading that referred to this article is titled "How Not to Fix the Great Real Estate Bubble." Because again, what could potentially happen if banks are forced to write down those estimates? It basically goes on to say who gets hurt when you write off all of those millions, because the banks aren't going to get hurt, the government's not going to get hurt. It's going to be basically the pension funds and taxpayers who now hold all of that debt.
Sure.
Right. So anyway, plus it, what does that really mean for the U.S. dollar and the safe haven aspect of the U.S. economy? Yeah. So anyway, this article basically.
When was that article written?
That was actually this past week. Yeah,
that's interesting because we really have, to go back to your point. In fact, I was playing tennis last night, and there's 8 of us out there, and I said, "Hey, congratulations, by the way, you guys! Everybody who owned a home for the last year, your value has gone up at least $100,000 in the last 12 months." I could say that comfortably, blanket across the board. Doesn't matter if they were at $200,000 or a $900,000 house. It's gone up at least $100,000 in the last 12 months, no question.
I was going to say, because if you start off with 200,000, that's a 33% increase.
And I have one that's closing next week.
Actually, excuse me, a 50% increase.
No, I have one that's closing next week that I gave her some estimates a year and 3 months ago for $268,000 because her husband had passed away, and we were establishing data-death cost basis.
Oh yeah.
And by the time there's a long story in there, but by the time we actually close next week, we're going to close at $413,000.
Wow.
Wow, that's There you go.
So do the math. It's ridiculous.
50% increase.
Yeah. And then because that price range is, of course, getting hit by 3 different buyers: first-time home buyers, investors, and right-size buyers.
Oh yeah.
Right.
So it's right in that sweet spot.
Exactly.
So Rick, you are quite the realtor guru here, and I'm sure there's a lot of people out there who are saying, "I need a good realtor, someone I can trust, someone who's smart." How do they get a hold of you at Keller Williams Realty?
Well, best way to do it is just to give me a call, 415-302-6348. You can always send me an email at rick.warner@sbcglobal.net. And I've got a great fan page, Rick Warner Real Estate Broker, just about to get to 1,000 fans. So I'd love to have a few people click on the like there and get to that 1,000 fans.
That would be fun. Okay, when we come back, we're going to get into a very interesting email for Mark and a couple of interesting articles that we have. So we're going to cut to our second commercial break, and again, the theme is seldom seen on TV. Here's the second trivia question. In The Wizard of Oz, we see 3 witches, each from a different location. From which location do we not see a witch? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. I just talked to them recently, and they're almost all filled up for this weekend, and it's only this weekend. So it's not even Sunday yet. So you're a little bit too late for that one. Call 888-912-1190. That's 888-912-1190 to answer this question. In The Wizard of Oz, we see 3 witches, each from a different location. From which witch? How about this? From which location do we not see a witch? 888-912-1190. Make sure to include your name, your email address. Speak slowly. Spell out your email for us 1 letter at a time. Don't touch that dial, because the best of investing will be right back. Okay.
Which witch?
From the south, right?
From the south.
You don't see that southern witch.
Okay, here we go.
We're good.
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my co-hosts Mark Hoff and Rick Warner. When we cut to the second commercial break, we ask this trivia question. In The Wizard of Oz, we see 3 witches, each from a different location. From which location do we not see a witch? Rick, you know the answer to that.
Well, you got those southern witches.
You got them
right.
southern witches.
Ain't no
That's
southern
true.
witches.
Ain't no southern witches. That's right. The one from the south we do not see. And you know what? Hey guys, real quickly before we get into Mark's email, we have another special trivia contest where the winner is going to get a 2-night stay at the beautiful Ritz-Carlton Half Moon Bay.
Nice. That's a nice place.
Yeah, very nice. And here is the information. Embark on a seaside culinary journey at Navio Restaurant, located in the Ritz-Carlton Half Moon Bay. Following a $1 million renovation, Navio is excited to share its new version of coastal cuisine and new contemporary design. Join us at the Bay Area's only oceanfront golf resort, the Ritz-Carlton Half Moon Bay, to experience the new Navio. Make your reservations today by calling 650-712-7040. That's 650-712-7040. And here is the question. 12% of people do this every month. What is it? And here are the rules. You know, Rick, you got to have a clean mind here. Okay.
I'm just sitting
I
here.
know,
What
you
do you...
give me that wry smile. And here are the rules. You cannot have been
More like 95%.
You cannot have been a previous winner on the Best of Investing. You need to email Edward at Best of Investing the answer by midnight tonight, and we'll answer the. We'll give the. We'll read from the correct answers the following week and announce it.
Excellent.
Okay, Mark, we received an email for you, and here it is. I have invested in deeds of trust before, but I am now having a hard time finding product. Why is that?
Well, happy Memorial Day weekend to all of you driving around listening to the Best of Investing. And my name is Mark Hoff, and I'm president of a company we call Pacific Private Money. And we're in the business of making loans to real estate investors. And the source of capital is private individuals. And for the last 5 years, we've been making now over 500 loans, over 100 million in originations to local Bay Area real estate investors, mostly for buying, fixing, and flipping. The local real estate investors kind of lost their source of financing after 2008 when, with the subprime mortgage meltdown and all that stuff, the banks really just stopped making loans to real estate investors after 2008 and have concentrated on making consumer home loans. And they've been making lots of money making consumer home loans. They don't really need that market right now. And so the private money lenders like Pacific stepped in and filled that void, and we filled that void with capital from private individuals. And when I first started out, most of my investors were experienced real estate professionals who had saved their pennies and they felt comfortable making loans on real estate. It was not a very well-known investment alternative, but over the years, particularly since interest rates have been stubbornly low, and the banks and CD rates and bond rates, and then of course the stock market, which right now is doing great, but it hadn't been for a long time. A lot of investors were seeking out ways to boost the yield in their savings or try to recoup some of the losses. And
So they had to look to alternative.
Right, so they had to look to
Sure.
alternative investments. So private lending has started to become more and more popular, also known as trust deed investing. And so the question is I heard about this trust deed investing. I'd like to get involved in it, but I'm finding them difficult to get in on. And that actually is an issue that's happening more and more nowadays. Is while we're still writing a pretty consistent 10 to 15 loans per month out of our office, and of course there's other lenders like ours throughout the Bay Area and California. The fact is that I actually have more investors than I have deal flow. So I tend to go to a core group of investors that I've been working with for a number of years who know my product and can make fast decisions, and so they tend to get the deals before others do. And so I get calls weekly with new investors inquiring about trust deed investing, and so I oftentimes tell them it's hard for newer folks to get in on trust deeds.
Unless they want to take a lower interest rate?
Well,
that was going to be my question. I mean, if you've got that much demand out there, couldn't you create more demand by lowering interest rate? Is that a bad question?
No, that's
Not
actually a
necessarily.
great question. So there's two answers to people who call me and say, how do I get in on these higher yields, these 8% yields I keep hearing about that are available through private lending? And the answer is twofold. One is you're willing to make your money available at a lower interest rate. So I've got a lot of investors who say, I want 10%, and then others who say I'll lend at 9, and then I've got a group that will lend around 8. And so if you're willing to take lower yields, that is going to be that's going to help folks like me, brokers like me, be more competitive in the marketplace for well-qualified borrowers and well-secured property. The second way is through a mortgage pool fund, which are starting to come back in favor in the marketplace today. The mortgage pool fund allows you to basically write a check to the fund and begin earning interest immediately as that mortgage pool fund, the manager of that fund, can loan that money out right away without having to put together a group of investors. And so we have a mortgage pool fund at Pacific Private Money that we launched this year. It's our second fund, and we've been making real estate loans out of that fund. And our goal over time is to grow that fund larger and larger, because it does give us a little bit more flexibility in terms of reacting quickly to opportunities that are out there, and fast close opportunities kind of are the call of the day today in real estate. I mean, they really are. It's if you can close by next Friday, you're probably going to get that deal before the guy that wants a 30-day loan contingency. So there are options for those of you out there that are curious about how to boost the yields in your savings and how to make 8% or better on your money. So for more information, maybe the easiest way is just to drop me a call at 415-883-2150. That's 415-883-2150. We're in the Bay Area. That's Pacific Private Money. Or go to our website. That's pacificprivatemoney.com. Or check us out on our website, the radio show website, thebestofinvesting.com. So it's a great opportunity for people out there.
And before we cut to our third and final commercial break, I got a kind of fun story here that I read. A rare Superman comic book was found in house insulation. Okay, so a number 1 episode, 1938, the debut of Superman was found. And now this guy, okay, first of all, when this thing, because of the condition that it was in at the time, it would have been worth, let's see, okay, on a 1, they graded from 1 to 9, okay? Excuse me, they graded from 1 to 10, and one that was graded 9 went for $2.16 million, okay?
Unbelievable.
Now,
for a comic book.
Okay, now, what ends up happening, though, is that this guy gets into a heated discussion with a relative about its value, and the back cover gets ripped.
Oh my gosh.
And so because of the damage, it is now 1.5 on the 10 scale, and so it's now only worth $127,000. Now, do you think that these guys maybe should have not had such a heated argument? I mean, can you imagine that? Suddenly both of these guys are ending up, I don't know what the relative was, but that's crazy. Okay,
all right.
We're going to cut to our third and final commercial break on that upscale note of Superman. And again, the theme is seldom seen on TV. This actor played the voice of Charlie in the hit TV show Charlie's Angels. Remember Farrah Fawcett and Kate Jackson and all that fun stuff? Who was this voice? Because we never saw him. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. And what we're looking for is who the actor. What was his real name?
Charlie.
Charlie. Yeah, Charlie's Angels. Okay. Okay. Now we can eliminate that name, Charlie. That's not correct. Call 888-912-1190. That's 888-912-1190 to answer this question. This actor played the voice of Charlie in the hit TV show Charlie's Angels. Who was it? Make sure to include your name, email address, speak slowly, spell out your email 1 letter at a time. Don't touch that dial, because we're going to have some closing thoughts here on the best of investing. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Rick Warner of Keller Williams Realty. When we cut to the third commercial break, we asked this trivia question. This actor played the voice of Charlie in the hit TV show Charlie's Angels. Now, this would have gone back to the 1970s, the original show. And who was that actor? Mark.
John Forsythe.
John Forsythe, that is correct.
Not Tom Bosley.
Not Tom Bosley.
That was the remake.
That was the remake.
Mm-hmm.
Okay. Rick, you've got an exciting story about San Francisco.
I don't know if it's exciting. I don't even know if it's entertaining, honestly. We're just trying to fill up the last 7 minutes of the show here. No, I'm just kidding. So I just picked up some new clients who have decided to no longer look in San Francisco to purchase. They're looking in Sonoma, Napa, And one of the main reasons was that they had written an offer on a house in San Francisco. It was listed at $1.1 million. The house got 40 other offers, and it went for $400,000 over the asking price.
And what was the original asking price?
$1.1 million.
That's
So
incredible.
nearly 40%.
That would drive anybody out, right?
Yeah, but
Now,
what do you think it was really worth?
well, it's worth $1.4 million,
Yeah,
obviously.
I know,
but no, exactly. I mean, I'll tell you though, it is really a challenge right now on the listing side to try, because really I guarantee you the agent did not want to deal with 40 offers. You know, I mean, that was not the objective. But it is so volatile and so crazy, and the money is so kind of available and cheap, for lack of a better.
Well, let me ask you, on a situation like that, because the agent has a fiduciary obligation not to disclose,
Right.
Did the buyer's agent basically say, look, there's probably going to get a lot of offers, so I think you should offer $400,000 more?
I don't know what their, I have no idea what they did. I can tell you that what I tell my people is, you know, based on your cumulative real estate knowledge that you and I have created via looking through a bunch of houses, I can tell you what the value of the house is based on the comps and what we can know. And then anything beyond that has got to be your comfort level.
Yeah, but who would think to offer
Well,
$400,000 more?
For these people, right, it goes back to what I said in a segment or two ago. If the house is what you want and you set the price of what's comfortable for you, this is what I kind of tell people. This is what I want. I want you to pick a price that when I call you and say, hey, congratulations, you got it, I want you to go, all right, not, oh crap, did we pay too much?
You know, it's interesting.
You know what I mean?
When I bought my house in #06, it was still kind of at the quote height.
That is the height, yeah.
That was the height,
I did
right?
that too, by the way.
And I wanted, I wanted the house, you know, for not a lot less, but a decent amount less. And the buyer had told me, because I was direct with him, he had said, listen, we have to get this price because it was my mother's, blah, 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 and they have the debt on the property. He gave me all these great reasons, right? And my wife and I remember this. We went out to dinner, and I'm not the kind of guy that likes to pay more than what I really want to. But we looked at each other and said, you know what? We really, really love this house.
Yeah.
And I'm still glad that I bought it. Even when prices dropped 25%,
Yeah.
I cared, but I didn't care.
Well, and that's exactly my point, is that, you know, it's got to be about the house that you're living in. Does it fill the need that you have for the asset, not from the investment standpoint?
Okay, and can you imagine one of the other buyers who lost out, you know, probably offered, you know, $300,000.
Yeah, $1.3 million. Right.
Yeah, and said, no, that for sure we're going to get this.
Yeah.
All cash, close in 3
That's it,
days.
yeah.
So let me ask you, Rick, do you know what kind of condition the house was? Was it fully remodeled and it sold for over, or was there upside potential?
Yeah, I have no idea. I don't know anything more than what I've told you. So, it could have been all kinds of different circumstances.
Because I'm funding purchase loans for rehabbers in San Francisco, and they're oftentimes having to bid considerably over asking on certain houses, but they're doing this with the future value in mind after they do things like full house remodel, which includes adding square footage, which in San Francisco on a lot of homes is easy. Well, it's actually.
I mean, you get permits and stuff to do that. Isn't that hard?
It's not if you stay within the
footprint.
envelope, so
Okay.
the footprint.
Oh.
So I mean, if you add a third story, yes,
Yeah.
it requires planning commission approval.
Sure.
But if you go down, it's
Like a
just
basement?
the building
Like tornado
department.
basement?
Right. Well, a lot of these properties have basements. A lot of them have actually 3 levels. They've got the street level, which is unimproved. It's
Oh.
garage and then
Yeah.
a bunch of stuff area in the back, and it might not even be legal height. Then they've got the main living area above, which might be, let's say, 1,000 square feet, but you could add maybe another 500 or 700 square feet on the street level by improving it. And then if there's any basement, you can actually go in oftentimes and dig below and create a lower level. So I've got
dig about 6 stories down, you can have a really nice place.
well, and so for example,
And a bunker.
we funded
And
a
a
deal.
bunker.
We funded a deal for a guy that the list price was $800,000. Their winning bid was $1.1 million. And they were willing to bid that much over because when they investigated the property, they determined they could turn 1,000 square feet into nearly 2,700 square
Wow.
feet.
But at what cost, though?
But it doesn't matter. The cost is going to be nothing versus what you can
Right,
actually turn.
'cause they're
around.
gonna turn
Your price
around.
per square
Well,
foot in
and
the
then
city
That's
is
true.
Their ARV, their after repair value estimate for that was going to be almost $2.5 million.
Oh,
Yeah,
wow.
yeah, exactly.
So,
right.
so if you're like a home buyer and you're looking at this, and it's $800,000, I'll make an offer of 900 or whatever. You're looking at the value of the as-is home, 1,000 square foot. But
Right, or maybe changing the paint
Right.
and some other,
Right.
but when you're actually adding square footage, it really is huge. Yeah.
Sure.
Right, so that's affecting prices. One might call that you're bidding against speculators, but in this case, this is these are contractors and remodelers who are going in and actually creating a new home out of
Yeah.
an existing
But
home.
going down though, what kind of view do you have?
Dark,
Yeah.
darker view.
Very dark. Yeah, that's amazing. I still have a hard time. I believe it, but I have a hard time because it just seems like what is really causing it to go up that much?
Well, the other, I always thought, going back a year or so, that it was going to be like a rubber band effect of the pricing increase. So I'm actually not surprised, but I don't think it's sustainable. I think we may have seen the juice of it this past year.
All right, we are going to cut out today, and here's our thoughts for the day. I went to a grocery store, and the clerk asked me paper or plastic, and I said, it doesn't matter to me, I'm bisexual. You like that?
Right.
Say goodnight, Gracie.
Yeah. And then the clerk asked me if I tweet. I said, no, but I fart a lot. I'm
This is a
sorry,
family
but-
show.
We had a
It
really
is.
good show going until then. What happened? Can
I'm
we
sorry.
cut that last part out?
Well, Rick, you got to stop sending this to me.
Yeah.
Okay, tune in next week to the Best of Investing. We're going to clean up the show a little bit too. We'll be giving away 9 more vacations for answering trivia questions. Thanks for listening. And on behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.